Hi, everybody. Sound check. Can you hear me now? You weren't supposed to be hearing me because I typed there, I'll be starting at 2:35. We'll be starting shortly. So we're just starting right now. Can you hear me now? Are we all good? Okay. I know in a year and 3 months, I don't think I ever started a minute late, but I had to today. First of all, apologies, small apologies. This was rescheduled twice. This was originally set up for next week, I think on a Friday. Typically, if I don't do something at 4, I usually do it on a Friday, when because I'm never trading Friday afternoon or whatever, rarely. So it's originally set for next Friday, I think, and I had something come up where I had to change it, so I moved to this week, Wednesday. And then Sunday, we found out the Bush holiday, so I wasn't going to do it on a holiday, so I moved it to today. So it was moved a couple times. Apologies. And of course, today turns out to be kind of a little bit of a hectic market day. So I still have, the DTS trading room is still open, and have 3 positions open, 2 half positions, 1 full position. But I'm kind of on autopilot. We have them all set, I think, to go into close like this. So I shouldn't be too distracted, but forgive me if I am for a minute. So that's number 1. Number 2, there's no number 2. We're going to get started right away. I don't think we'll be here an hour and a half. I think we'll be here for an hour, but I always run a little bit over what I think. So you should have a slide up, correct? That says DTS Market Review Day. I'm actually using the camera, so it may look a little bit different because I'll explain why in a minute, but you should not even notice the difference on your side really. So here's what it says. Here's the purpose of this. I do this about every couple of months, and it is truly originally was designed to be a review day for the subscribers to the DTS daily market letter. Now, just to confuse, this is not in any way any kind of sales thing for the market letter. This is not a super popular thing. This is something that when I started the company, I debated putting it out because it's a unique person that gets it. It's a day trading letter for the most part, but it does get into all the market comments. And a lot of the people in the room get it because they're not there all the time, or they start late, and some other people get it who are trading on their own. And the people that get it just absolutely love it and swear by it. But it's kind of a unique group of people that do it. So nobody's ever going to sign up for it after this. This is more of an educational day for them. And the reason I invite everybody here is because I think it goes through a good process of how to look at the market. And naturally, to truly understand all the concepts, you have to be fairly well and versed in technical analysis. And I'm going to talk about that a little bit today. I'm going to talk a little bit about technical analysis and looking at this and the difference between using that in news, and specifically because I've had so many questions on that, including an email I have that I may even read to you to just kind of review and give you my comments. But here's the actual purpose of today. Well, what we're going to do today, first of all, the schedule is I'm going to show you a letter, and and again just go through some of the basics of how to use it again, it's intended for the people who are getting the letter, and to show you the features of the letter and how to use it to your best advantage. I'm going to do that in a minute. I'm actually going to do that last because when I go to review the last couple of weeks down here, I'm actually going to just go ahead and rather than put them onto different slides, I'm just going to go right through the letter and show you exactly what I do and how the letter did over the last couple of weeks, just to show you what the typical thing is. And again, anytime I do something like this, whether I am showing trades, for examples, or letter review, whenever I do a presentation, I always go back, to the last couple days. I'm not going back to, 1932 to show you this great setup that happened or anything else. It's just the day-to-day stuff that happens every day. And, a lot of you here get the letter, so, you can verify that. And I want to start off taking just a review of the last 2 months big picture to get a bearing on where everything is. So the actual order we're going to do stuff is I'm going to talk about this, and this real quick. And then we're going to look at the next 2 months. And then I'm going to review the last couple of weeks. And when we do that, I'll show you the letter and how to use it. Okay? So we're a little disjointed here, but good enough. So first of all, the important thing to understand is I go through the letter in a minute when I do. And the letter takes a look at the day-to-day bias, both as a swing trader, as a long-term trader, and specifically in this letter, it goes through the day-to-day bias, meaning as the day trader, where should my bias be? Now, bias means market bias. And market bias means what direction do we think the market is going today? Up all day, down all day, up in the morning, down in the afternoon. And the reason we care about that is for 2 reasons. A lot of people trade the market itself, How many of you traded the market exclusively? Give me a quick show of hands. How many of you trade the market exclusively? I'm putting a one that says a divider. If it's not my vote. Like that's basically all you do, just the market, the market, the market. Okay. I like trading the market, but I do it, I would say closer to occasionally rather than exclusively. And the reason is, and I'm just going to throw this out there for you guys for what it's worth. If you're successful at whatever you're doing, that is great, and you can be very successful doing the market. Doing the market only takes a tremendous amount of what? If you're doing the market only, if you're trading the market as the only entity that you're trading, what does it take a tremendous amount of? And I mean more than I have. Yeah, everything takes concentration and accuracy. It takes a lot of, well, discipline is the same word as patience. Yeah, patience. It takes a lot of patience was the word I was looking for. Because there's only one entity you're looking at, right? There's one thing. If it doesn't set up right, if you don't understand the setup, if you miss the setup, right, you're kind of done, right? Now, that applies per every time frame. Like if you're a 15-minute chart trader, you may only have one chance a day to do something. If you're a 2-minute chart trader, naturally you'll have multiple things. But even if you're a 2-minute chart trader, you can't really effectively trade the 2-minute chart if you don't know where the bigger time frames are going. Is that true, everybody? You don't just randomly pick up in the middle of a 2-minute chart and say, here we go. So if you're confused on the picture for the day, if you're not really sure if we're bullish or bearish or whatever, it can become difficult to trade the market. You have to wait until you see it, and a lot of people don't have that patience. So I just want to warn you of that. If you're having trouble, that is likely the issue, because when you trade equities, what you get is you have the ability to still trade the market when the market is so compelling that you can't stand the thought of not taking the play. But you also then have this great variety. You can pick the best of the gap list, the best of the hourly chart list, the best of the daily list, and you have, depending on how much share size you trade, you have anywhere between 300 and 1,000 symbols that are very tradable that you can do that give you a variety of concepts, individual strength and weakness, different sectors, that go up. And I have a gold stock short today because I was bullish on the gap down. What a great thing that is. What a great bit of variety. So I'm just throwing that out there, that after my many, many years, that's what I, ended up being at. But I started that whole conversation as kind of an offshoot because what the question was, well, why do you care about the market bias? Well, if you trade the market, you better have the market bias down, right? Because that's exactly what you're doing. But even if you're trading stocks, I want to know what direction the wind's blowing, right? What if the tide's going in or out? In other words, there's a lot of stocks, about 80% of the stocks are called market stocks, meaning they make up the main bulk of the market. Intel and Cisco and whatever else you want to name. And you're not likely going to make money going long those stocks if the market's falling, right? So I want to have a good sense for the day. Hey, the market should start off bullish today because it's gapping up, but then it's going to fade when it gets into yesterday's high or whatever it is. Does that make sense, everybody? That's what a market bias is. That's all I'm really describing. Does that make sense? It's your plan, it's your blueprint for where you picture the market's going to go that day. If you could draw it ahead of time, and that's what I literally try and do, is say, okay, here's where we're going to do this, and we're going to do this, and then we're going to fade away and end up lower today. That's your blueprint that you follow that helps you very much. And keep in mind then, whenever you have a bias of what's going to happen, you then need what I call a trigger or confirmation. You need something to say, boom, yes, here we go. I think we're going to be lower today, but you don't just jump in with your pants down and say, okay, I'm shorting everything out there. You don't do that. You wait for some confirmation. You wait for the bulls to battle the bears and for the bulls to lose. That's the confirming thing. So you need a bias plus confirmation. It's very, very important. You could look at partially, it also helps give you your timing, if you will, to say that, here's the moment where, okay, from here forward, this happens, so now that's going to confirm my short bias or long bias, okay? And I want to keep something in mind too, a great exercise for you all to do. Matter of fact, once I tell you why you're doing it, it defeats the purpose of doing it. So just think about this for 30 seconds. If I were to tell you to sit down and I want you to write me a long-term projection of the stock market, and I want you to tell me where it's going to be 5 years from now. Think about that. And just take a minute, because I can't really give this to you as an assignment because I'm going to tell you next why I'm having you do it, and it'll ruin the assignment. So think about it for a minute. If you had to write to me, where is the market going to be? And one way to make yourself do it is you have to take, let's say you have to take half of all your liquid assets right now, and you have to either go long or short the market, and you can't touch it for 5 years. You don't have to give me the answer. I just want you to think about it. Think about it. Get a definitive answer in your head. And just tell me yes or no. Do you have a definitive answer? Let me know when you got it. Do you have a definitive answer? The question is, you have to take half your liquid assets and go long or short the market, and you can't touch it for 5 years. Can't touch it. Okay, and I don't need you to tell me which way you think it's going. What I want you to realize is that if you have a definite idea in your head where it's going to be, that is somewhat of a burden to you. That is a negative thing. That is a hindrance. Because we cannot tell where the market's going to be in 5 years. And then what you have then, what you're left with is your actual bias, if you will, your natural bias. There's nothing wrong with having one. And that's why I put here my natural bias. I'm a very bearish person by nature. Now I follow the charts, but I'm a very bearish person by nature. And for me to be bullish for, in the big picture, for over 10 years now, you have to understand that's nothing that's nothing to be taken lightly. My natural inclination is to want to be bearish. I'm like, these rallies are stupid. The whole stock market's stupid. Everything rallying in 70p, it's all crazy. But you know what? I'm still bullish because that's where prices are going. So the reason I asked you to think about that, where you think prices will be, is because it is somewhat of a negative if you have a definite view what do you think is going to happen, because it is just your opinion. Does that make sense, everybody? And there's nothing wrong with having an opinion. Does it make sense? There's nothing wrong with having an opinion, but I want you to understand that your opinion can get in the way sometimes. There are a lot of people that have permanent bullish biases, and it hurts them tremendously. They're just permabulls. Everything's viable, and you can't think that way. You got to be very neutral and read the chart as it comes. The chart is what matters. The chart is what tells us everything. Period. All right. So there we go. There's the introductory comments of what we're going to do today. And here's the purpose of this meeting, to show how incredible technical analysis is. It is way beyond the beliefs of most people how good it is. Do most people have a clue how to use it? No, they don't. Most people don't even know what technical analysis is. I get emails frequently about, it's time to be bearish because the 14 exponential moving average just crossed the 200 moving. I mean, if that's what you're looking at, no offense, but you're never going to make a penny in the market, period. None of that garbage works. None of that is anything to do with technical analysis. I know some of you think, well, that's exactly what technical analysis is. Moving averages crossing moving averages. No, it is not at all. Moving averages crossing whatever you want to dream of is not anything to do with technical analysis. It will do nothing but lose you tremendous amounts of money. There is no one single thing that is technical analysis. Technical analysis is the whole picture of understanding how charts interact is the best way that I can phrase it. I call it the language of charts. Is that also clear, everybody? And again, I don't mean to step on any toes, but I do these talks to speak very definitively about stuff that I think can help you. You will never make money with that type of an attitude about moving averages crossing or technical indicators making you money. It just simply is not going to work. Does that make sense? You don't have to agree, but at least doesn't make sense. Because I get so many of those emails, where why didn't this work? Because this crossed this and this crossed that. It's just nothing to do with it. It's just not what it does. Common sense should tell you that. Because if I asked all of you to type what moving average is the magic moving average, you'd all come up with a different one. The 20 simple, the 13 EMA. You all have different moving averages. So who's right? Who's wrong? What time frame are you talking about? Right? We're going to get bullish when these cross on what time frame? Which it's all just hookah. It's just nothing. I also want to explain, and we have a couple examples of how worthless news is to understanding the market. Again, people trying to understand how we relate the news, and it is such a scam, if you will, the way the news is presented to drive the market. It doesn't work that way. It never does. The market is the greatest discounter of all known and future unknown information there is. And most all news is late to the table. The market knows it already. And trying to react to good and bad news is just crazy, and it doesn't work. The the truth of it is that every day they have to make up what news event they feel caused the market to move. And some days it's comical. But the problem is at the end of the day, you are told, look, here's why the market fell today, because blah blah said blah blah blah, or because this report said blah blah blah. It's just all garbage. The only exception is when we have what we call shock value news. If there's something truly shocking that happened, and I'm talking once a year events. I'm not talking about, employment numbers are a little off or that type of thing. I'm talking about mushroom clouds over Washington, D.C. I'm talking about really shocking stuff that is beyond the knowledge of the market. That's something that the market may actually truly react to rather than just a morning knee-jerk reaction. So that's one of the goals we'll get to a little bit today. I want to provide some great education. I always try and do that. Is to just simply give you some good things to look at and to get you thinking in the right direction the best that I can. And then also, of course, to show how the market ladder works, because there's some little nuances to it. Okay. So we're going to do, first of all, the last 2 weeks. I don't want to spend a lot of time on this because this overlapped a little bit with the last one that I did. But just very, very quickly, I just want to show you how well you can read and understand charts. And again, I just want to quickly go over the last month plus. We're actually going on what? The last 2 months, just the big moves that we've had, and how they are very, very readable. And again, I'll show you in a minute. There's some more information on the website you can go to get this. But on October 2nd, my call was to be short, and this is 2 days before we fell. October 2nd short, and it was in the DTS daily market letter that morning. It was in the long-term trader, and the play was called that afternoon in the long-term trader. ATI short. ATI short made 5.7 R that month alone. Here's what happened then that month. Boom, boom, boom. But that's not all. And by the way, I'd like to point out that on October 2nd, there was no news whatsoever anywhere going on. The 3rd, there was no news whatsoever going on. When we dropped, guess what? Somebody came up with some reason why we dropped, and it was a ridiculous reason. It had nothing to do with anything. So the point again is that this call was made based on the chart, anticipating what would happen. Once it happened, then they come on the news and tell you why it happened. Going down here to the bottom, I just want to show you how, I said on these bottoms that I was not going to go long-term trades off of this bottom. Said that very clearly. October 30th, not a good bottom. No play long. Stated any move higher would be choppy. There was nothing in the long-term trader long. I was flat on the long side, nothing going on. Did not say, I said that this would not work. Would not work. As a matter of fact, it's the first time since 2016 I said that a weekly uptrending support area I would not buy. It was the first time in 3 years I said that, and it turned out to be true. So again, I'm just showing you what you can learn from charts. And of course, that turned out to be a good plan because we popped and then we made a new low. Now, when we made this next new low, I then changed gears. I didn't think we'd hit this. Now we'll consider a stock on a nice setup. And then on this day right here, that green bar day, long-term trader, I went long Intel and SQ on the morning of the 26th. Intel already hit target 1. November 28th comment, the trip higher off the bottom will be difficult one and may not reach prior highs. Do you think we're having a difficult trip off the bottom? We sure are. So again, this whole 2-month time period has been mapped out perfectly ahead of time, just using technical analysis. And this is all I do is look at charts. Just to answer some other questions. Other than the moving averages you see on these charts, I use no technical indicators. I do not only do I not use news in any way, shape, or form, but I keep myself blind and deaf to any news when I'm doing this. And there's nothing else except just understanding multiple time. Now, what you're not seeing that I do use are other time frames. Daily chart, weekly chart, monthly chart for big picture, daily, hourly, 15-minute chart for intraday pictures. But this is how you can map out. Now again, make it clear, these are not after the fact comments. These are all comments that were made before the moves happened, before, okay? And I do challenge you to find anywhere, send it to me please, any service, any entity, any place, any person, I don't care if it's Goldman Sachs or some trader, you know, anybody that had this right the last 2 months, anywhere, any place. And please strain through. What you get from a lot of people are just the kind of meandering comments. The, well, gee, if we hit this area, we have to see how the market reacts to it, and if we see a lot of selling, prices could drop to this area, but if we get through this area, you know, that garbage you don't need. That's not helpful, okay? These were absolute definitive plays done based on technical analysis. If you want some more information on that first month, if you go to the free stuff page, there's a ton of stuff I have in the free stuff page for you, as you don't know that already. If you go to the home page at DTS at disciplinedtradingstrategy.com and go down to free stuff, you'll find several sections of informational stuff, including some Trade of the Week videos and some old prior events that I've done. And you'll also find there is a section there where it talks about some events, including the bookmark on the market part 3. That is the most recent one that I did. It was done in mid-October, and it goes into great detail about a bigger understanding of why the bearish bias in October. Okay? So we all good on the quick picture of the last couple months? And again, check out that video if you want to see some more detail of every last thing that I looked at to determine the bearish bias. Do we have any questions on that? Because next I'm going to go to pulling up the letter and going through the last 10 days or so and showing you how the intraday bias is formed and giving you guys a little quiz as we go. All right? Are we good? Any questions? Any stuff you want to talk about? Seriously, take a look for me though, and you show me any service at all that, you know, other than giving just blah blah comments, that actually, you know, had this correct. It's been a tricky couple of months because, you know, we're in a long time trend and things got very shaky in here back like they did in February. Let's flip over here, and here is the middle part of a market letter. Now you're going to see like in 3 parts because this is it's kind of long. So here is the top of the letter, okay? Up here on the top, you have the date. You have click here on how to use this letter. So you can click there and it'll pull up a PDF file on a lot of tips on how to use the letter. It talks about a whole lot of things. I'm not going to run through that because you can read that on your own, but I want to add some of the highlights. There's the opening bell here that just has a quick comment. You know, I'm often very sarcastic. You may find a sarcastic comment here. You may find who knows what here. Or just a quick little comment about what's going on the last day, the prior day. This is back on Tuesday the 20th, which is where I was going to start the review about 2 weeks ago. The scales are neutral, as today or tomorrow will likely be a reversal day, but there is no way to state exactly when it will set up ahead of time. Then every day you get these 3 scales. There's the intraday outlook, the midterm outlook, and the long-term outlook. And very, very important to understand the difference between the 3. The long-term outlook has been to max bullish and has never changed in 10 years, whether it's been in this letter or whatever letter or whatever. That is the big, big, big picture. This is the monthly view. This is, are we going to have another 2000 or 2008? This is, are we going to have the big bear market? That has never been off of green in forever. Big, big picture has and still remains bullish. Now, if you listen to that bookmark on the market part 3 video, I believe it says in there that this is the first time on this pullback that I've opened the door to the fact that this could change. In other words, I talk, if you listen to bookmark market 2 and bookmark on the market 3, I talk about in one of those the fact that there are 3 ways that you make a big top. We did not make a top in either of the first 2 ways. There's no way, no way, no how. It's possible that a top could be forming in the 3rd way. It's the ugliest, most difficult, hasn't happened in 2 decades. It's not likely, but it's the first time I've even opened the door to discussing the fact that a top could be forming. That I won't be able to tell for a little bit. It depends. We have to see how this rally plays out back to the upside. So at the moment, I'm just calling this a sideways weekly market. The midterm outlook is the next several days, couple 3 weeks. That's what changed to me to be an all-out bearish bias on October 2nd, this one here. This will flop back and forth, and again, it is anticipating what's going to be happening, over the next few days. So when we're approaching a bottom, like you see here, went to neutral, because you'll see when we go look at this day, we had been falling, but I was anticipating we would stop falling. So it went to neutral, and when we put in a bottom, it would go to green. And then the intraday outlook, of course, will change every single day. That is the intraday pattern, bullish or bearish, what's going on. Okay, so that changes back and forth, just like a ping pong ball bouncing all over the place. Okay, then if we scroll down to the middle, there is the guts of it, and that's what we're going to go through right now. I'm going to go through the last 2 weeks on a day-by-day basis, and I'll have you guys give a little some commentary. I'm going to keep this covered up in terms of what the comments were for the next day. Ask you guys to give comments and see where we are and how we all played out. There's always a chart of the daily chart and the 60-minute chart. Now, something I had on that prior slide was QQQ versus SPY. You can look at either one. It simply doesn't matter. When the QQQ and SPY are together, when they look exactly the same, it doesn't matter what you look at. When they are different, you need to understand that the market's likely going to be more volatile and that any prediction is going to be tougher. When they are the same, generally the QQQ leads. Most people don't agree with that. Most people are wrong because it simply does. So I like to put the QQQ up there, but to do my market analysis, I always look at the QQQ and the SPY together. And also for a big picture analysis, I also look at the IWM, that's the small cap index, along with some other stuff that, in terms of sector analysis, that you can see the analysis of that in that video I've referred to called Bookmark on the Market 3. Okay, so this is the middle part of it. It goes through and said what happened yesterday. And I phrase this in an educational way. The reason I put this here, some people say, why would you put it there? I can see what happened. Well, because I phrased it in an educational way, what happened. Then the outlook for what's going to happen today. This comes out in the morning, so this is what's going to happen today, the prediction for what's going to happen today. And this is yesterday's accuracy, and it says they're even as subjective. I'm taking yesterday's comments and saying, well, how did it play out? How good was it? Okay. And then down at the bottom, there's some miscellaneous stuff. The econ is coming out today, earnings for today. Intraday bullish and bearish watches for day trading, swing core watches for longer term trading, and then a little article of the day on various educational topics. Okay, so that's the format of the letter. Now I'm going to skip back up here to this part, and we are now going to go through and talk about very quickly the technical part of what's happening on an intraday basis for the most part. And some of these comments are also longer term. So where we are left off on this day, I'm going to pick up right here. And this is back on, if you want to follow on your charts, this was actually on the 20th of November. So we're going back about 2 weeks. Okay, the 20th of November. And the daily chart looked like this. And the hourly chart had fallen hard into that red bar down there. Now, for the first couple, I'm just going to read to you my comments, and when we get going here, maybe I'll have you guys try and give some comments as to what you think we should take a look at. So here's the outlook with this going into today. And by the way, this is a very difficult pattern to make comments on because, well, you'll see why in a minute. But look at the comments here. Today will be a most difficult day and one that largely needs to be resolved if you're looking to get a bearing on the market this morning. First of all, the QQQ is significantly different than the SPY. I just talked about that. Yesterday's close in the SPY stayed above last week's low, which is way above the October low. Not true for the QQQ, whose big red bar yesterday will be challenging the October lows this morning when we likely gap down. Now keep in mind, this is sent out around 8 o'clock in the morning, and I can't know for sure where we're going to gap. I can tell by the futures where we're likely going to be, so I was projecting that we would have a gap down that morning. The challenge, now listen to this very carefully. Guys, when we break the October low, what do you think the analysis should be? The QQQ is about to break the October low. which in a sense would be setting a new weekly low. We're talking about right here. Here's the October low, and we're going to gap down below that low. What should that analysis be? What are you thinking just generally? If we're talking about breaking the October low, what would common sense tell you is how to be thinking when we're breaking a weekly support level, a weekly low? Think about it a minute. What do we got? I need a drink of water anyhow. This is where we close the day before the morning. The market's going to be gapping down below the prior weekly low. How do you go about handling that big picture, small picture? Okay, interesting. It's like you find support. How do you define support then, Ajit? How do you define support? Because there's nothing to the left. We're in new uncharted territory. We just broke what people call support. I'm asking a question. I'm not saying you're right or wrong or I agree or disagree. I'm just saying the average person would say, well, we're going below support. How do you find support? There is no support to be found. You jumped off a cliff. Well, you'll be fine because you'll land on the ground. Well, the ground's 2 miles below you. How do you define support? And everybody else, open the conversation here. This is where you can learn a little bit. What do you say when you write a market letter and you're talking about the market breaking the weekly support area that morning? Where's your bias going to be? And of course, there's probably some different answers in your head because you know what happened because you're looking at your charts. But if you can go back in time to the day this happened, what were you thinking that morning if you day trade or if you're swing trading? The previous support will be broken to create a new range. Right. Yeah, I want you to, why people have such a hard time with technical analysis is because they look at this and they say, gee, we're breaking support, I'm shorting. And of course, they'd be dead wrong. But people who say that don't understand technical analysis at all. They don't understand. This is the problem. Just one of my biggest causes, my biggest things is just that you get people that say the technical analysis doesn't work, and it's because they don't understand it at all. Anybody that says we're breaking support and we're going lower, you're just, you're I don't know what you're doing, but you're not doing technical analysis. It involves more than that. If technical analysis were as simple as just looking to the left and saying, oh, there's a line, 182.63. If I go below that, I'm short for the day. If it was that simple, guess what? We could teach third graders how to do this, and they'd all be making millions of dollars before they left grade school. But listen to what this said that morning before. Listen to this. The challenge of the October low will likely be reacted to since we have dropped a significant level to get here. It's quite possible this may form a swing trading low. If so, the best scenario is to overrun the October low by a significant amount and then watch the follow through to the first recovery attempt. In other words, we may not get to see the effect until tomorrow, which by the way is exactly what happened, or the following trading day. Do not be confused and think that the break of the October low was a shorting opportunity as a swing or a core trade. The opportunity was on October 2nd, way back up here, right? Any weakness below the October low should be looked at as a buying opportunity in the big picture. This was said the morning before we opened, okay? I cannot give any real concept because it will be wild and it would likely be. So I'm talking about intraday. Intraday, I can't predict what moment we'll find the low. You have to wait and see the pattern intraday, and that happens some days, okay? So that's what was said for that day. And there was no specific intraday comment given as to when it would be long or short because it was just a wild morning. There was no way I could do that. So it says excellent comments, but no call was made. So then the next day we end up and we gap down and we still have a big topping tail, but we go green. Okay. So where do we go from here? Well, the prior day, excellent comment. What do we do for the next day? Well, here's the comments for where we're going the next day. First of all comments from yesterday are still 100% on point, meaning don't think the break of this low is a shorting opportunity. Make sure you read yesterday if you have not. It was kind of a two-part play, which the follow-through is for today. Today we're looking at a transitional hourly buy setup just after the daily chart broke support, which makes long today the perfect setup. That is the only play today. I lost where I was. At the moment, we have a small gap up. The 5-minute high is the long for the day. which means going long after the 5 minutes of trading, but wait for at least one red bar on the 1 minute chart. The stop is under 158.00. Look long the entire day in possible swing trade positions. It doesn't get any better than that, folks. I mean, you just can't get any better than that. Because you know what happened from there. We gapped up. We had a decent day up that day. No play triggered though, based on what I said again, because they gave, what did I give? A 5 minute high. I didn't run through this again. I apologize. I was too busy today to run through 11:20. So this is on Monday. Right. So I ended up no play based on concept. We ended up side. What happened? Why are we? Why did I skip a day? What's going on? 20th? 21st? Oh, that's that was this is the Friday after Thanksgiving. That's why. You know, when I went through these slides, I did the same thing. I went back and said, "Oh my gosh, I left off a slide." Friday after Thanksgiving, the market was open. We were closed. I didn't do any chart analysis. So see this here. So this is Thursday. This is Wednesday. This is Friday. So that's a little half day. So that was just like a nothing thing. So this comes back now on Monday. Where are we going from here? Monday after Thanksgiving is always a little bit of a pain because the half day on Friday is typically low volume. It doesn't count for much. Blah, blah, blah. Who cares about that? If we fall during the first 15 minutes, then the high of the day will be the play long. Blah, 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 blah. And you can see we start moving up. And the comments on the prior day, it was a bit tricky, but the call was perfect. It was not a clean 15-minute chart. If you did a 15-minute buy setup this day, it would have not worked properly. But I said wait for the high of the day. The high of the day was the only real play to be long, unless you were sitting there. Keep in mind, when you are sitting there during the trading day, naturally you have all this additional information because you're seeing the chart form in front of you. It gives you additional information to be looking at. Keep in mind that I am setting this letter up before the market opens, predicting what the entire day will look like, and you can't always do that perfectly, okay? So on this particular day, it was a good call. If you were sitting there during the trading day, you might have been able to do a little bit better, but having a bullish bias in general for the day on the pullback is what was important. So, you know, it continues. I don't want to bore you here, but this is the analysis that needs to be done. Now, something that I think is real important, if you're a day trader, if you don't, if you're on your own, you trust your own judgment, and or you don't want to get a letter like this, I suggest you write a letter like this to yourself every day. I did that on days I wasn't sending a letter out to the public because I felt I needed to do that. It's amazing how much your opinion will change when you just glance at a chart and say, okay, well, here's what's going to happen today, and you actually go to justify it in writing to somebody. So if you are a futures trader or you rely on the market, I suggest you actually do a market analysis for yourself. Do just like I'm doing. Print up a couple of charts, draw some lines on them, say what do I expect to have happen today. This gap up should drop, and when it drops, it's viable on the pullback, it's not viable on the pullback, and make your mind up exactly how you want to handle the day. The reason people lose a lot is because they leave the decisions up to their idiot during the trading day. You all know what I mean by that? You need to have a blueprint on what to do every day. You need to have a framework of what to do, what to look at. You can't just enter the day with a blank mind and look at the charts and expect things to pop into your head properly. It's not going to happen. So what's the bottom line for this day? What was the key word? All right, today will be equally as difficult because the pattern leaves no focal areas of pullback and the market is extended and running into the open. To top it off, we're gapping down below the only possible support area, which is 162.50 approximately. This opens the door for anything to happen today as we are in a daily downtrend, but with our only bullish fallback being the fact that the weekly is in an area. I think there's a 50-50 chance the market will find the low of the day on the gap down very soon, possibly in 5 minutes, if not 30. That makes the simplest play to be long over the high of the day. And it is probably the safest play, as that would avoid going long if we do continue to drop today. Blah, blah, blah. So then the next day, excellent call. Market will find the low, blah, blah, blah. For this next day. Now, I want you to know something on here because I want to get into this next 10 minutes. I want to spend discussing something. I think that the intraday pattern day you will see over the last 2 days is typical of what we will see until the bears dry up and we see a bigger green bar on the daily chart. See, looking at the whatever time frame you're on, understanding the market, understanding price action for any stock for the market involves the interaction of the various time frames. Which time frames? Doesn't really matter. You can take your snapshot anywhere you want to. Somebody asked me about a 30-minute chart there. I said, great. If you want to use a 3-minute chart and a 29-minute chart and a 45-minute chart and a daily chart and a 3-day chart, it doesn't really matter. As long as you get enough snapshots of what's going on, that's all that really matters. You know, it's kind of like picture a doctor doing an x-ray. You know, like they do like an x-ray of your knee or something? They'll take one angle, they'll take another angle, right, so they can see from all different sides, right? Well, I bet you if you ask the doctor, it probably doesn't matter if you take it straight on and then 30 degrees or 40 degrees or 50 degrees. As long as you take like 4 or 5 pictures surrounding your knee, that's what you need to see. You need to see a cross section from different views. And that's what you need in the market. You need a cross section of different views. It doesn't really matter. You don't have to get hung up. It doesn't matter. Really, it doesn't matter what time frames you want to use, what moving averages you want to use. It's all a picture that you have to get used to and how everything interacts. Okay? So what it says here is this is constantly a battle between the bulls and the bears. And it's kind of like the tide's going in, the tide's going out, the waves are coming in, the waves are going out. When you hit a certain spot where bigger buying is likely to come in, you see the picture change from bears winning battles to bulls winning battles. And this is a constant battle that we see going on. And while this battle was going on for these days, I said right here on this day, it's typical what you see the battle until the bears dry up and we see a big green bar on the daily chart. Well, guess what happened the next day? We got a big green bar on the daily chart. There it is. I'll go back. But because that's what happens. You have this battle going on. It's kind of like two armies battling. And all of a sudden, when one starts to run low on soldiers, they're very quickly overpowered. And the army just plows right through at that point. It's like that. When the bears run out of firepower, when they run out of sellers, boom, all of a sudden there's this explosion going the other direction. And that's what you want to see. Now, I bring that up because everybody said, oh, this day it's all because of a news event this day. Well, yes, this is the day the Fed chairman said blah, blah, blah. But the point is that if the Fed chairman would have said that on this day up here, the market would have dropped. And the analysis would have been, well, Fed chairman coming out and telling investors that interest rates won't be a problem in the future. Obviously, the Fed is very worried about something to come out and make this comment. Investors are scared and they drop the market. I mean, you see what I mean? No matter what is said, interest rates being raised and lowered has both made the market go higher and lower. It just depends on what the market wants to do with the information. I mean, it happens all the time. By the way, in general, do you realize that the raising of interest rate has been accompanied by markets rallying almost all the time in the last 2 decades? We're always saying we're afraid of interest rates, but if you look at actual charts, it's not even really what happens. So again, the market was ready to pop and it exploded this day. What it needed was a spark. The spark could have been what a Fed chairman said. The spark could have been the fact that some company announced that they're hiring more people, and boom, 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 the economy's off and running again. Whatever it is. So the charts are really 100% what matter. So this call this day exit. Market will find the low of the day, gap down very soon, possibly in 5 minutes. Okay, so in the next day here. So now we have this big green bar, and now things get trickier because now we have a big red bar into kind of a resistance area, right? And I'm probably going to stop here with the review here real quick because I want to focus again on that last comment I made for a little bit here. I'm sorry, but I don't understand why you felt price would rally after gapping below week low. Paul, it's just it. It's not about support. It's about the fact that picture. It has to do with the fact that support is like a rubber band area, not like a glass plate area. Okay, it's not to the penny. We dropped multiple days. Look at how many days we dropped, Paul. We dropped from here to here on the weekly chart. We dropped from here to here almost continuously on the daily chart. And after that much of a drop, what you want to see, Paul, it's not the event you want to trade. It's the reaction to the event you want to trade. Let me say that again 2 more times. It's not the event you want to trade, it's the reaction to the event you want to trade. It's not the event you want to trade, it's the reaction to the event you want to trade. So it's not the making of a new low that determines something, it's the reaction to the new low. And the reaction to a new low will almost always be bullish when you drop multiple bars to get there, whether you hold support or break support. And actually breaking support, Paul, think about it this way. People who have been long are in pain. People who went long here are in pain. People who went long here are stupid and are in pain. People who are up here are still in pain. People in here are in pain, and they can't take it anymore, right? When is it, Paul, when you finally are down so much money, you get so disgusted, and you look over and you say, okay, you know what? I got to draw the line somewhere. Here it is. I'm drawing the line, right? So you go below that area, and because, whatever you want to call these people, think, well, that's it. That's the puke out point. In other words, the last of the people who want to sell because they're at that new low, and that cleans them out. And then there's nothing but buying. Because if you look at a bigger picture of the chart, the weekly is still in a general area of support. If you go back and look at the weekly chart, Paul, in other words, I don't have my charts up. I can't pull them up. But if you look at a weekly chart, let me just draw it for you. The weekly chart was in an uptrend. And then where do we go? So we did this, whatever we did here. So if you come back here, Paul, and you break this low by $1, and then you go flying higher, would you look back, Paul, and say, gee, the market held support and went higher? Or would you say the market went crashing through the prior support area and miraculously reversed? You see what I'm saying? In the big picture, this is a support area. It isn't. See, people get too hung up on all this. That it's the exact number from over there before. It's a fluid thing going back and forth. Buyers, sellers, buyers, sellers, buyers, sellers, and you exhaust sellers at some point, and then you have to say, well, when are the buyers stepping up? It doesn't have to be right at the prior level. The point is that there's this distance that it took to exhaust sellers. There's a distance it takes to exhaust buyers. If the distance it takes to exhaust buyers is twice as much as it takes to exhaust sellers, you're in some kind of an uptrend. If they're fairly equal, you're sideways. But after exhausting all those sellers, you don't start shorting because you technically broke by a few pennies a prior level. There is no concept of shorting below the prior level in that type of pattern. As a matter of fact, as I teach it in class, that's not a strategy, it's not a concept. As a matter of fact, it's the biggest mistake traders make. When you have a wide whippy pattern, you are not allowed to go short under this area, period. That's the way I teach it. You're not allowed. There's a difference. You have to understand the difference between a tradable base that you expect to continue in the direction lower and one that you expect to be a reversal. And if you expect it to be a reversal base, you play it to reverse even below the base. That's just the way it works. And it works that way almost perfectly all the time when you understand the difference between the types of bases, reversal bases, continuation bases, and where do they show up on a chart. This is not a continuation base. It's a reversal base. You wait for it to react and to get bought at or below the support level. And the only way you go short is after it rallies, if that rally fails. Does that make sense, Paul? I went on and blah, blah, blah for 5 minutes there, but does that make sense? No, Paul, it's not that simple. No, it doesn't mean you can just buy stocks that have dropped many days. No. Because stocks that have dropped many days are probably in downtrends or power trends and you don't want to touch them. That's not the pattern. The pattern was a defined sideways pattern that has dropped many days to a general support area. That's different than stocks that are just free falling in the middle of nowhere. It all involves the pattern, the other time frames. It's not simple, but it's easy. If that's, I'm not sure I said that right. So let me go into some. Let me read this real quick. But the original chart is different. What do you mean? I'm not sure what you mean by that, Paul. The original chart is different. What original chart? It's 3:30, guys. If you've got positions open. If you're in the room with me, I'm raising a couple stops here. Right. If the chart is different, then my answer would be different, of course. If you're in a downtrend, you never go long. Basically, not that time frame. But a sideways trend is not a downtrend, at least not on that time frame. I mean, a sideways trend will have a downtrend on a smaller time frame going between the top and bottom of the base. Paul, you know what it is, Paul? It's very hard to like jump in the middle of the story and try and give you an answer without backing up one step before, one step before, one step before. You know what I mean, Paul? Because I'm trying to explain something, and we're on page 22 of a 50-page book, and it's hard to do without going through the first 21 pages. You know what I mean? Oh, the QQ is well, not on the weekly chart though, Paul. The weekly chart is not in a downtrend. And I wish I could pull it up here. I could take a picture of. I don't have my camera up over here, but I could take a picture of the weekly chart of the QQQ. The weekly chart is not in a downtrend, Paul. Right? Correct? And this is what I mean by the overlapping of the time frames and understanding how they mesh together. The weekly chart is not in a downtrend. The monthly chart is in a pure uptrend, right? The monthly chart is in a pure uptrend. The weekly chart is not in a downtrend. And the weekly chart has its biggest support areas from back in February still below this level. So, but you get the general drift of what I'm trying to talk about, right? Yeah, it's difficult to just pick up on one chart and and try and explain the whole thing. But so let me look at one more day here, and then I want to read a quick email and go over the answer here. So the play of the day here. So here we have this consolidation forming now. The play of the day is to be long after 15 minutes and over today's high. So wait 15 minutes and the high of the day and over yesterday. So we have this sloppy consolidation. We want to be over yesterday's high and over today's high and at least 15 minutes in. The reason I do that allows you to find frequently the market may pop early in the morning and then fall the rest of the day. So you want to try and avoid that sometimes. It depends on the pattern. The way that it charts, while I always prefer to find support areas, I almost always want to find support to go long rather than taking a breakout. It's a little tricky today because there are pretty good support areas at 162.50 and 160.75, which could be played on a 50. You got to buy setup after 10:30. And then of course this day, following that exact commentary, home run times 10. The play is to be long after 15 minutes over today's high, and it's set up just perfectly. The 15-minute high was a home run times 10 that day. So this is what the market letter does every day. It continues to go through and try to give a blueprint of exactly what happens. But again, for those of you using the letter, if you have any questions, please let me know. For those of you not using the letter, my point simply is technical analysis is a magnificent thing. It is what you determine price action by. And there's so much confusion about other things to look at that it confuses people. And a lot of it has to do with shortcuts. Let me read this to you. And again, the person who wrote that, if you're here, don't volunteer. It's you. You can either private chat me or you can ask comments and nobody would know it's you. But here's just a general comment I had. I'd gone back and forth already a couple times about somebody not understanding news, saying that, well, everything is just news-based. How do you figure out the market? The market reacts to news. It bounces all over the place. There's no way to do this. And I said, no, you're 100% wrong. That's not what happens. And they came back and said, this is my biggest hurdle and roadblock to my trading. Distracted academic purpose. Well, take a look at the stock, blah, blah, blah. Okay, please take a look at the stock TSRO. It gapped to 74-ish due to a buyout. Based on the chart last Friday, what I saw was a series of dojis at resistance level with a 13 EMA crossing the 200 SMA on a daily chart. Would you be able to predict, just based on technical analysis, today's price action without the buyout news? This question scares me. Now, do you understand the question that's being asked? And I get this similar questions from a lot of people. Said, please look at TSRO. It gapped to 74 because it got bought out. Based on the chart Friday, I see a series of dojis and the 13 EMA costs of 200. Would you be able to predict this based on technical analysis? What's the answer to that question? Would I be able to predict a buyout because the 13 EMA crossed the 200 EMA? Could I predict that? Jerry, you almost have the right answer. Let me give you the right answer. No! To ask this question means you have zero technical concept. It has nothing to do with technical analysis. You have nothing to do with technical analysis. Nothing at all. So people say this stuff. It has nothing to do with it. First of all, when I talk about news being ineffective, I'm talking about in the market in general. If you're going to listen to the unemployment numbers in the morning and say, oh, good unemployment numbers, I'm going to go long today, you're going to get your ass handed to you on a plate every single day of your life. You'd be much better off going to Vegas and put your whole life savings on black, okay? The news will never help you in the marketplace. Now, news on an individual stock, naturally the stock will have a knee-jerk reaction to it. And naturally, if a company is bought out It's bought out. It's going to go whatever price it is. That's not what we're talking about. And there's no way to predict news at all, period. That's not what we do. When we look when I look at stocks that gap in the morning, I'm not having tried to predict the gap the day before. I'm not playing gaps the day before, hoping I'm guessing right as to what's going to happen at earnings. There's no way to tell from a chart at all when something is going to gap up or how it's going to gap or what's going to. There's no way to tell that at all. Zero. A lot of the gaps sometimes come from completely secret information. A stock gets bought out, it was unbeknownst to anybody. The stock's just trading, and all of a sudden it opens up $20 higher the next day. That's not on a chart. That's shock value news that makes the chart, that changes the chart. There's no way to know that whatsoever. Now, the next question is, once you gap, can you use technical analysis to understand where the chart's going? And the answer is, yeah, you can on a lot of charts. Some it's still very difficult to tell. Some you can tell. A stock that's bought out is not going to trade. If it's bought out for cash, it's not going to trade at all. But there's no way to predict that. It's not what we try and do in technical analysis. It's not our job at all to do that. And naturally, when news is said about an individual stock, it will have a knee-jerk reaction to it. But even then, the news is still worthless. I don't care what was said about the stock. You can't make money by listening to the news and determining the quality of the news. It could be the best news in the world. The stock may gap up $2 and fall for 20 days. I'm going to talk about this tomorrow some also during the event that hopefully you guys will be at as well. That's the Introduction to Mastering Technical Analysis seminar. Okay, but that is not at all. It's hard for me sometimes to explain this, but it is you you make money looking at a chart. And yes, when there are earnings coming up, I don't get in the stock the day before. I don't try and guess them. There's no way to tell that. You can't tell from the chart pattern. You can't tell from anything. There's no way to tell. The only odds that you have, if you're in a very bullish market, the odds are that an earnings report is going to send the stock higher. That's all we know in general. That's the only little bit of odds you have. But you can't tell looking at a chart before an earnings day if it's going to gap up or gap down. You can't tell that. No way, no how, zero chance. You can't tell if stock's going to get bought out. You can't tell if a CEO dies, gets caught in the bathroom with the secretary. You can't tell any of that stuff ahead of time. That's all shock value type news. But once the news is out, many times you can tell what's going to happen. That has to do with gap analysis and understanding people who are trapped and understanding people that every time a stock moves a great amount overnight, there are people that want to be long, there are people that have to be long, there are people that want to be short, there are people that have to be short. And seeing that balance can help you understand. And that's why it's kind of a separate concept in technical analysis, is understanding gaps. But there is no shortcut to just understanding how a chart works. And I just can't emphasize enough that you cannot be talking to me about squiggly lines crossing each other on a chart or about reacting to news. You're going to make money that way. You will not make money doing that. I guarantee you, you will not make money doing any of that. Okay? But again, in this type of a market, I mean, you have to make that decision to me, guys. You have to make these decisions to be long and short. Boom, boom. You can't rally. I mean, in this type of market, you can't rally 5 days and then start talking about whether or not to be long or not, because here's what happens to you. You get powdered like that. So, and this is going into yesterday. So today we gapped down, we rallied back, and we're holding very, very strong. Any questions, anybody? All right, probably see most of you then tomorrow at 12:30, okay? All right, take care, guys.